I use this thing every single day, you guys. Of course it's a tax write-off. What is up, everybody? My name is Tyra and welcome back to Keeper Tax, your one-stop shop for all things 1099 taxes. Here on this channel, we create resources for freelancers, independent contractors, gig workers, and anyone else who files or should be filing business taxes. You guys know I'm all about giving you the tax content you need to set yourself up for success as a gig worker. I am here to open you guys' eyes to the world of 1099 taxes, and today I am going to teach you how to write off your computer. You may ask yourself, is my computer a tax write-off? If you're a freelancer or a self-employed person who uses your computer for work, then it is tax deductible. But you can only deduct your business use percentage of your computer. If you've never heard of the business use percentage, it's basically a ratio of the amount of time you spend using something for work or business purposes versus your personal needs. So let me give you an example. I have one computer, so that obviously means I use it for both work and personal reasons. In order to find the business use percentage, I need to map out my time. I'd say I spend about 70% of my time using my computer for business purposes, which means 30% of the time I'm using it for personal use, like online shopping, watching dog videos on YouTube, or stalking my crush on social media. So, for tax purposes, I can only deduct 70% of my computer expenses. And don't get too hung up on this being 100% accurate. A realistic ballpark estimate will do the trick. But before we go any further, if you do have a computer that you solely use for work purposes, it would be 100% tax deductible. I also do want to point out that if you are a W-2 employee, you can no longer write off your work computer even if you bought it specifically for work. So if you fall into this category, you have to ask your employer to reimburse you for the cost of the computer. Now that you know how to calculate your business portion for computer usage, let's talk a little bit about depreciation. Normally, computers are capitalized and depreciated. That means that instead of writing off the cost all at once, you actually spread out the cost over the life of the asset, as defined by the IRS, and that would be 5 years in this case. Depreciation is simply a way to recognize the declining value of an asset. If you heard someone talking about depreciation before, they were probably talking about a car. So if you buy a car, the resale value of the car goes down a little bit every year. But why is that? As the car takes on more wear and tear, its overall function declines, which makes it harder to compete with newer models. It's the same way for computers. Depreciation is a way to reflect this decline in performance by spreading out the original cost over its useful life. Now that's how it works in theory, but in practice, most of the time you can actually go ahead and deduct the whole business use percentage of your computer the year you bought it. And that is great news. You actually don't have to bother with figuring out depreciation and all of that. One way to write off your whole computer at once is using the de minimis safe harbor election. That lets you write off any kind of business asset as long as it costs less than $2,500, which should cover the cost of most computers. And there's also bonus depreciation, which lets you write off 100% of the eligible cost of your computer, and we will touch on that in a bit. Why should I bother depreciating my computer? Like I said, the IRS has made it pretty easy to avoid worrying about it. However, there are some situations when it makes sense to depreciate, even if you don't have to. It allows you a lot more flexibility. For example, When you're doing your tax planning for the following year, you can factor in the depreciation into your bottom line. So instead of buying that new printer for tax purposes, you can defer that cost knowing you have $400 of depreciation to use up for that year. You can also use bonus depreciation, like I mentioned before. This is the easiest way to do depreciation because it's automatic. You literally don't have to check any boxes or submit any forms to get it. Like I said, this lets you write off 100% of the eligible cost of your computer. You just have to think about whether you want to claim it all at once or save it for the future. For example, if you end up with a $20,000 net loss because you claimed bonus depreciation on a bunch of new office equipment, you can apply that loss against any future net income indefinitely. But don't forget, this is for the business use of your computer only. The one downside to bonus depreciation you should be aware of is if you take bonus depreciation, you have to apply it to all business assets in the same asset class. This situation is honestly super specific, so pretty unlikely to affect most freelancers and self-employed people. But just to make things clear, an asset class is simply a bundle or a group of investments that are subject to the same laws and regulations and have similar characteristics, like the same useful life according to the IRS. In other words, if you use bonus depreciation on your computer, which has a 5-year life, you have to apply it to all of your other assets that depreciate over 5 years. This includes cars and trucks, as well as more niche forms of business assets like airplanes and cows. That's right, if you've got some cows laying around, you can depreciate them over 5 years. That's true for dairy cows or breeding cows. Let me go get me some cows. The bonus option is really easy and honestly what you're probably going to do in most cases, but say you don't want to apply bonus depreciation to all of your 5-year assets. You can still depreciate your computer using Section 179, which is a bit more complicated. With Section 179, you can write off as much of your purchase as you want in the first year you use it, up to an annual limit of $1,040,000. Now, I've never heard of any computer costing $1 million, and as you can probably tell based on that number, Section 179 was created with stuff like factory equipment and huge offices in mind. But us freelancers can take advantage of it too to write off our laptops, even if it's not always the easiest option. So there are two main requirements for Section 179. You can't claim it if you actually lose money on your business after all of your expenses are taken into account, and you can't claim it if you use your computer for work less than 50% of the time. If you only use your computer for business 49% of the time or less, you have to do the de minimis like we talked about before, or bonus depreciation. So all in all, Section 179 gives you a lot of flexibility because you can either write off the whole cost of your computer at once, or you can depreciate it. But I'm going to give you an example of what using Section 179 will do because, of course, that's what I'm here for. So, let's say you go shopping and you want to buy stuff for your new home office, and you buy $5,000 worth of computer equipment and have $3,000 of net income at the end of the year before factoring in the computers. With a Section 179 election, you could zero out your current year's net income from self-employment. Then you depreciate it by spreading out the remaining $2,000 over the equipment's useful life, which will be 5 years in this case. What that basically means is that you can write off $400 a year for the next 5 years. Now that we know how to write off the computer itself, it's also important that you know about the other computer-related expenses that are tax deductible. You can also write off your internet bill if you have a home office. And no worries, we have a full video on home office deductions that you can check out, and of course, I linked it down below. There's also malware or firewall software, business-related software, computer repairs and maintenance, your keyboard, mouse and mouse pad, monitors, cords like your charging cords or your HDMI cords, printers and scanners, an external video camera and microphone, computer ports, or even tablets. Now, if you have a computer, you have at least one of these items that I just mentioned. So make sure you guys are not leaving any money on the table. We are coming for all that belongs to us as freelancers, okay? And just to keep up with all of your computer related write-offs, you should definitely check out the Keeper Tax app. It can automatically categorize your business expenses, and I just don't think that you guys understand how dope that is. To get started, just go to keepertax.com or click on the link down in our description box below to get started today. So you guys, that is all that I have for you guys today. I know that I said a mouthful, so as always, if you have any questions about anything I mentioned in today's video, leave us a comment down below and we'll be sure to get back with you as soon as we can. If you would like more easy to digest tax content, make sure you give this video a like, and if you have not already, make sure you hit that big red subscribe button down below and make sure your notifications are on so you can get all of the alerts and stay up to date with all things self-employed taxes. Thank you guys so much for watching, and I will see you in the next one.